Today we're going to do a deep dive into the best ways to negotiate with Chinese suppliers, whether you're ordering small test batches, scaling a proven product, or moving major volume as one of their VIP buyers. By the end of the video, you'll know exactly how to approach each situation, what to say and what to expect, and how to get the best deal without burning any bridges. If you're new here, my name is Michael Regan and I spent over 8 years living in China, learning the ins and outs of sourcing products, negotiating with factory suppliers, and helping businesses around the world grow profitably. So let's jump in to the first category. The low volume negotiations. Think of it as like samples, new products, or early stage companies. So let's start with those who are just getting started. Maybe you're testing a new product idea, ordering samples, or just validating a market before going big. Now here's the key. Don't pretend to be a big fish. Suppliers can kind of tell that you're a newbie by how you ask them the questions, that you're just price shopping and you don't want anything to do with real business. So instead focus that you're serious, organized, and have a plan. Before you message any supplier, do some homework. Know your target market and sales channel, whether it's Shopify, TikTok Shop, Amazon, Target, Walmart. Get familiar with what products you are selling, who's buying them, and what kind of volume potential exists within your niche. When you talk to suppliers, be transparent. Say something like, I'm testing this product in this specific market, and I plan to expand if sales actually meet expectations. Based on my research, I estimate that around this many units will be sold each month after a test run is performed for this many units. Now, if you have connections like influencers, retailers, or partners, mention them. Maybe not exactly by their name, location, and contact information because you don't want them stealing your business, but anything that builds more credibility to reduce the supplier hesitation, to kind of give you a leeway and for the MOQ, like minimum order quantity requirements. Now, to be honest, you probably won't get the lowest price at this stage, but sometimes you'll be surprised. They may even give you free samples, which has happened before if they know that you're serious. Try to do like a video chat with them if they speak English. If not, you're just gonna have to do text for now. What you can try to negotiate more seriously is the flexibility on the minimum order quantity. Say something like, I love to start with a smaller batch to validate the product first, and if it performs well, I'll reorder quickly at larger volumes. Most suppliers understand that logic. They call it the Yangping, the sample order. While you're beginning, expect to pay upfront if you're a new client, but use this stage to build the trust with a supplier. If your test goes well, congratulations, you're moving on to the second category, and that is the medium volume negotiations. Usually this is a category when you have established business with proven sales data. Now this is where things can get interesting if you know what you're doing. If you got a working business model with data to prove it, that is your leverage. The key word here is receipts, receipts, receipts. How many times have you heard people say, I've done this and this and this, but they got nothing to show for it? No website, no sales data, no store for themselves. It can be quite annoying and easy to sniff out if you're a supplier. So if you run a store like Shopify or Amazon with consistent sales, by the way, all those platforms have back-end systems that tells you how many orders you have, how many products have been sold, at what quantity, at what price. You don't want to share too much to show them what your profits are, but at least say you have the sales record to prove it. Now, this is an assumption that a lot of people make, that they're scared that Chinese suppliers will steal your customers, and that can be true to an extent. But you have to understand there's a lot of friction that can happen between the product inside China all the way to your end customer. And if you're really good at solving the marketing target market with your niche and getting the customer interested to buy the product, sometimes the Chinese supplier doesn't have this expertise about how to localize a product, and that's why they need the retailers to further sell their products. So yes, there's a chance that they can steal your business with direct to consumer, like supplier direct to consumer. However, do realize if this is a small factory and they don't have like a team that speaks the local language, let's say you're selling to a Spanish speaking country, you're gonna have the advantage there, and they don't want to invest in the resources to do that, at least in the short term. So I wouldn't panic in the beginning, but showing them these receipts will build the confidence between the supplier and the buyer, which is yourself, and they respect the proof. When they see the real sales, it tells them, hey, this buyer is legit, I'm gonna treat them right, and they'll keep ordering because they want to keep buyers coming back and back for more. They like the stability. And this is where you can negotiate beyond the price. For example, you can ask for customization options, sometimes even for free, depending on the amount and the quantity you're buying, like branding, color changes, packaging. Maybe you have a design idea that your customers have asked for that you wish they had, like a different product, like a premium product or a standard product, and you can make it happen with a supplier. You can also negotiate the payment terms. Instead of paying 100% up front, you might be able to start with a 30% payment to start the production, then split the balance as needed as it goes through the logistics process. You can even stretch payments further until the goods arrive if you've already done a couple orders with a supplier, not the first time you're negotiating for like a large order, depending on your relationship and the supplier's cash flow. The goal here is cash efficiency. You want to keep money working in your business, not sitting in supplier accounts. And remember, the relationships matter. Be responsive, be polite, and make their life easy. I know this is counterintuitive to what you may have been hearing, but the easier you make the supplier's life, the more willing they're to work with you and to give you that price point you're looking for to get the maximum profit margin. They will remember the ones who are consistent, have large sales, and make their lives easy. By the way, if you're serious about finding reliable suppliers for your e-commerce idea or just want help navigating through the whole process, feel free to contact us using the link in the screen below or just visiting our website. At Borderless Commerce, we've helped multiple businesses of all sizes source directly from China safely and efficiently, and we can help you do the same. And just to recap, my name is Michael Regan. I've been living in China for 8 years and been dealing with suppliers for a long time. Now let's move on to the third category, and these are like the VIP buyers, where you can have some creative deal-making ideas. At this stage, if you're ordering in serious quantities, enough to get the factory owner's attention, your leverage changes. Here's a twist though. To push your margins even further, focus on making the supplier's life as easy as possible. Let me give you some examples, right? So depending on the supplier's process, you may be able to negotiate paying them directly in Chinese yuan if you have those channels instead of USD. If your supplier doesn't have the proper USD channels, like if you're paying them in Chinese yuan, you can save them on fees, and you might even get better pricing in return if they don't have like a bank account that accepts dollars, or they just want the quick money transfer to their account in their local currency. It can be beneficial and something to mention. Now, this may not help all suppliers, because if they have a lot of overseas experience, chances are they have a USD account. But if you're working with a smaller supplier that maybe doesn't have a lot of overseas experience, you can consider. Second, try to simplify your packaging or logistics, or have your own packaging company. Now, if you're sending all the products to a local warehouse in your country, or if you have someone in China doing the packaging, this is something you can breed up. You can ask the supplier to just ship their bare bones product. I don't need your packaging. So it's going to be cheaper for them to do, and the packaging weight and dimensions will be a lot less and easier to handle. I've had customers, instead of buying shoes with a shoe box, they just buy the shoes and put them in a plastic wrap bag, and it cut down on the weight, the size, and it made the life easier for the supplier as well. This also cuts down their workload. Number 3 would be to coordinate with local shipping agents. If your logistics partner is in the same city, suppliers can even drop goods directly at their warehouse. We've had customers where literally the factory was like next door to the shipping agent, so they would just get like a small car and just walk over the product to them. It makes life easier, it makes the logistics easier, instead of dealing with multi-city logistics when it comes to specific products. Now, you see what you're doing here. You're not always negotiating on the price. You're negotiating the efficiency of your business, which will then lead to faster shipping times and happier customers. Of course, you want to redefine your payment terms, but at this level, you might be offered a line of credit or even extended payment schedule. But that usually requires a registered company and some financial transparency that you're willing to show the customer if you want to open a line of credit. For those that don't know, you go through an underwriting process through their lawyers or whoever they use for their underwriting and financial analysis, and then they will give you a score on what your financial score would be, and then they'll give you some credit based on that. So that is like saying, hey, I will have a credit of up to like 10K USD for my orders, so you don't need to pay anything, and they will run the orders for you because you've built that trust and built that line of credit. By now, you're not just a customer, you're a partner, and that's when the best deals happen. Now, here's a bonus tip. Negotiating is one side of the coin, but knowing what to negotiate for is just as important. Before you even reach out to suppliers, make sure your product idea has a real demand for it. You can look for trending items on TikTok, Amazon, or AliExpress, products that have a growing search volume but low competition, or niches where you can add a unique spin through design, branding, or bundles. Now, it needs to be something you are genuinely interested in, because think about this: if you plan to go into an e-commerce business and let's say it's a 5-year ordeal, are you willing to deal with this kind of product for 5 years? If the answer is no, you may want to rethink your product. So if you want a deeper dive into this, you can check out on how to find these winning products for your e-commerce business watching this video right here.